History was made on December 17th, 2025. Silver, the so-called devil's metal, shattered every record in the books, reaching an unprecedented $66.87 per ounce. Industry experts are now calling for triple-digit silver, with $100 per ounce no longer a fantasy, but an inevitable destination. The question isn't if silver will hit $100. The question is when, and the answer might surprise you. The explosive rally that changed everything. Let's put this surge into perspective. At the start of 2025, silver was trading around $29 per ounce. As of December 18th, 2025, it's hovering above $66. That's a staggering 126% increase in less than 12 months. To put it bluntly, silver has more than doubled in value this year, leaving gold's impressive 32% gain in the dust. But here's what makes this different from previous rallies. This isn't speculation. This isn't a bubble waiting to burst. This is a fundamental structural shift in the silver market that's been decades in the making, and it's finally coming to fruition. On December 11th, 2025, silver breached the $60 mark for the first time in history. Just days later, on December 17th, it surged past $66, with some analysts reporting intraday highs, even touching $66.52. The momentum has been relentless, fueled by a perfect storm of supply deficits, industrial demand, and macroeconomic uncertainty. The supply crisis. Nobody saw coming here is the uncomfortable truth that's driving silver prices into the stratosphere. We're running out of it, not in the distant future, right now. According to recent reports, the silver market experienced a substantial deficit of over 215 million ounces in 2024, marking the second highest discrepancy in over 2 decades. But that's just 1 year. The cumulative supply deficit since 2021 has exceeded 800 million ounces. Let that sink in. 800 million ounces of silver have been consumed without replacement. Peter Krauth, editor of Silver Stock Investor, warned earlier this year about declining above-ground silver inventories, stating there may only be 12 to 24 months left before they run out completely. That's not a forecast for 2030 or 2040. That's a crisis unfolding right now. Here's why the supply crunch is permanent, not temporary. Unlike gold, which is primarily mined as a primary product, most silver comes as a byproduct of copper, lead, and zinc mining. Silver mine output has declined by 7% since 2016, and it's not coming back. Even with prices doubling, mining companies can't just flip a switch and produce more silver. New mines take 5 to 10 years to develop, and many aren't economically viable until silver reaches much higher price levels. Keith Neumeyer, CEO of First Majestic Silver, has been vocal about this issue. In an April 2025 podcast, he explained that triple-digit silver prices are necessary just to motivate mining companies to invest again, given the enormous risks and capital requirements involved in developing new silver projects. Industrial demand is exploding. While the supply side tightens like a vice, demand is accelerating at an unprecedented pace. And this isn't jewelry or investment demand we're talking about. This is hardcore industrial consumption that cannot be substituted or postponed. Solar power has emerged as silver's biggest industrial consumer, and it's growing exponentially. Industrial fabrication in 2024 reached another all-time high on a projected 20% increase in demand from the solar market, with global photovoltaic installations projected to surpass 500 gigawatts annually. Demand from the solar sector alone could exceed 230 million ounces by 2026. But solar is just the beginning. Electric vehicles, 5G infrastructure, artificial intelligence, semiconductor manufacturing, and data centers all require significant amounts of silver. High-efficiency N-type solar cells, which are becoming the industry standard, require even more silver than older generations. Every smartphone, every laptop, every server in the cloud uses silver. As technology advances, so does silver consumption. Michael DiRienzo, president and CEO of the Silver Institute, noted that India, traditionally known for jewelry demand, is now benefiting from firmer electrical and electronics demand, contributing to record import levels. This shift from decorative to functional demand means silver consumption is becoming less elastic, more essential, and impossible to reduce. The macroeconomic perfect storm. Beyond the physical supply-demand imbalance, powerful macroeconomic forces are converging to push silver higher. The US dollar, long considered the world's reserve currency, is weakening structurally. Silver surged more than 4% to above $66 per ounce on December 18th. Hitting fresh all-time highs as investors increasingly price in 2 interest rate cuts in early 2026. Comments from Fed Governor Christopher Waller, a leading contender for the Fed chair role, added fuel to the fire. He stated that U.S. borrowing costs should be up to 1 percentage point lower and warned that job growth has slowed to near zero. The November U.S. labor data showed the unemployment rate rose to 4.6%, the highest since 2021, although payrolls increased more than expected. This environment is tailor-made for precious metals. When real interest rates decline and currency devaluation concerns rise, investors flee to tangible assets. Silver, with its dual role as both an industrial metal and a monetary asset, becomes the ultimate hedge. Geopolitical tensions have further amplified safe haven demand. The ongoing conflicts in the Middle East and Russia-Ukraine, coupled with escalating U.S.-China trade tensions following President Trump's tariff announcements, have created an environment of persistent uncertainty that favors precious metals. Why experts are calling for $100. The forecast for $100 silver isn't coming from fringe bloggers or YouTube personalities. It's coming from serious institutional analysts and industry veterans who have spent decades studying this market. Larry Leppard of Equity Management Associates told investors at the 2025 New Orleans Investment Conference that he believes silver could easily reach $100 per ounce given the deeply entrenched structural deficit, with realistic targets of $75 by mid-2026 and $80 to $90 by the end of the year. Bank of America analysts have a bullish outlook on the silver market and expect to see more record-breaking prices in 2026. The bank is forecasting a high of $65 per ounce and an average of $56.25 per ounce for next year, though these forecasts may prove conservative given silver's recent performance. Felipe Geisels, chief strategy officer at BNP Paribas Fortis, stated that when under valuation, deficits as far as the eye can see, and a new industrial revolution meet, market magic happens. That's the story of silver in 2025. And he predicts silver could hit $100 an ounce in 2026, though with volatility along the way. Chris Marcus, founder of Arcadia Economics, emphasized that the silver supply deficit isn't just an issue for the industrial sector, but for the futures and bullion markets as well, creating a multi-layered crisis that will inevitably resolve through much higher prices. Even more aggressive forecasts exist. Brian Steer, another industry expert, believes we could see silver prices between $200 and $400 an ounce before this bull market ends, citing the inevitable supply-demand brick wall the market is heading toward. The investment thesis has changed. Here's what makes this rally different from previous silver surges. In 1980, the Hunt brothers artificially manipulated prices through futures contracts, creating an unsustainable bubble that collapsed. In 2011, silver's rally to nearly $50 was primarily driven by investment speculation and ETF inflows, which reversed when economic conditions changed. This time, the fundamentals are undeniable. The supply deficit is structural, not cyclical. Industrial demand is driven by technological necessity, not optional consumption. The macroeconomic backdrop of currency devaluation and geopolitical instability isn't going away. These aren't temporary factors. These are permanent shifts in the global economy. Silver-backed exchange-traded products reached $40 billion in valuation by mid-2025, establishing silver as a legitimate global safe haven asset alongside gold. These ETF flows directly tighten physical markets, creating a feedback loop that drives prices higher. For mining companies, this creates extraordinary profit potential. Many silver miners have production costs between $20 and $30 per ounce. If silver reaches $120, as some analysts predict, that's profit margins of 300 to 400%. No wonder silver mining stocks are attracting serious institutional attention. What could stop this rally? To be fair, not every scenario leads to $100 silver immediately. Several factors could temporarily pause or slow this advance. A dramatically stronger US dollar could weigh on silver prices, though given current fiscal and monetary policy, this seems unlikely. A major breakthrough in silver substitution technology could reduce industrial demand, though decades of research have failed to find viable alternatives for many applications. A sudden global recession could temporarily reduce industrial consumption, though this would likely be offset by increased safe haven investment demand. Market analysts warn of pronounced near-term volatility. Felipe Geisels noted that profit-taking could spark some violent drawdowns before silver hits $100 an ounce. These corrections are normal and healthy in any bull market. They create buying opportunities for patient investors rather than reasons to exit positions. The consensus among major forecasters, including Citigroup, WisdomTree, UBS, and Goldman Sachs, points to silver holding well above pre-rally levels, with most clustering predictions in the $50 to $65 range through 2026. However, given that analyst predictions at the beginning of 2025 averaged around $33 and silver has already doubled that figure, these forecasts may prove conservative. The opportunity window is closing. For investors who have been waiting for confirmation, December 17th, 2025 was that confirmation. The all-time high has been broken. The psychological barrier of $60 has been shattered. Institutional analysts are upgrading forecasts. The fundamentals are stronger than ever. The question isn't whether silver will continue rising. The supply-demand mathematics guarantee it. The question is whether you'll position yourself before the next leg up or after $100. becomes the new floor rather than the ceiling. Silver's relatively low price compared to gold makes it accessible for investors at all levels. At $66 per ounce, it's still a fraction of gold's price, offering significant upside potential with more volatility. Whether you choose physical silver, ETFs, mining stocks, or futures contracts, multiple paths exist to participate in this historic bull market. Financial advisors typically recommend keeping precious metals exposure between 10 and 20% of a portfolio, with silver representing a portion of that allocation. Given current market conditions, the conservative allocation may prove insufficient for those seeking to capitalize on what could be the investment opportunity of the decade. The silver market is sending a clear message. The old highs are gone forever. The supply crisis is real. Industrial demand is insatiable. Macroeconomic conditions are ideal. $100 per ounce isn't a dream. It's a mathematical inevitability. The only question that matters now is this: will you act while silver is still in the double digits? Or will you be explaining to yourself why you didn't buy when it was only $66.87? History has given you the signal. The experts have given you the roadmap. The fundamentals have given you the confidence. What happens next is entirely up to you.